See this Bitcoin daily chart. Price rallied from $1,700,000 to $1,12,000 in just over a week. That's a $12,000 swing. Now imagine catching just part of that move, not every tick, just the swing. Look here at Apple. It broke out of a consolidation, retested the level, and then pushed higher for several sessions. Anyone who entered on the retest held for days and captured a clean, stress-free profit. That's swing trading. You don't chase candles all day. You plan your levels. You wait for price to come to you. And then you ride the wave. In this video, I'll break down swing trading from beginner to pro. We'll look at timeframes, tools, entry steps, live examples in both crypto and stocks. And I'll also share common mistakes I see traders make. Swing trading means I hold trades for days to weeks. I'm not scalping for 10 pips. I'm not day trading for one candle. And I'm not holding for years like an investor. I'm catching the medium-term moves, the swings. Why is that important? Because these swings are where markets breathe. They're not random noise. They're structured moves from one level to another. Let me compare. A scalper might open 20 trades a day. A day trader might hold positions for a few hours. As a swing trader, I might only take 2 to 4 trades a week, but each one has the potential to give me a bigger reward, with less screen time. Swing trading is perfect for traders who can't sit in front of charts all day. If you work, study, or just don't want to babysit trades, swing trading allows you to still profit from meaningful moves. Now let's talk about timeframes and market selection. I keep my timeframe structured, daily timeframe, for trend bias. Am I bullish, bearish, or sideways? 4-hour timeframe, for setup. Where's the zone where price might react? 1-hour timeframe, for trigger. Do I have confirmation to enter? See this. Bitcoin daily chart shows higher highs. That's bullish bias. On the 4-hour chart, I mark the pullback zone where price previously reacted. On the 1-hour chart, I wait for an actual confirmation, a candle close, a structure break, or a retest. For stocks, it's the same. See this Apple stock chart example. Daily trend up. 4 hours chart shows a pullback into prior breakout zone. 1 hour gives the hammer candle as my trigger. The structure doesn't change, only the asset. I start with price structure, but these tools give me clarity. Moving averages 20, 50, or 200 EMA or SMA. These show me trend direction and areas where price often reacts. See this. Tesla pulls back into the 50 EMA after a breakout. That's not random. It's a technical reaction. RSI 14. I don't use it to predict tops or bottoms. I use it to confirm momentum. If RSI is deeply overbought while I'm looking to buy, I'll wait for it to reset. MACD. Confirms whether momentum supports my bias. If daily MACD is bullish while I'm planning a long swing, that's extra confidence. ATR. Helps me avoid tight stops. If BTC's ATR is 200 points, I won't use a 20-point stop. I'll get stopped out by noise. Support and resistance, trend lines, Fibonacci. These are classic, but they work because everyone sees them. When multiple tools line up, that's where I act. Now let's talk about step-by-step swing process with live trade example. First, I always begin on the daily chart. The question is simple. Is the market trending up, trending down, or just moving sideways? Look here. BTC has been making higher highs and higher lows for the past couple of weeks. That tells me buyers are in control. So my bias is bullish. I'm not even thinking about shorts. I only want to plan long trades. Next, I drop to the 4-hour chart. Here I mark the important support and resistance zones, the levels price respected multiple times. See this level around $1,05,000? BTC broke above it earlier, then pushed higher. That makes this a strong support zone. And notice, this zone also lines up with the 50 exponential moving average. That's confluence, structure plus indicator lining up at the same spot. This is exactly where I expect price to react. Now I zoom into the 1-hour chart. And here's the key. I don't just enter because price touched my zone. I need confirmation, a trigger. On the way down, BTC was making lower highs and lower lows, a micro downtrend. But watch this. Price breaks that downtrend with a strong bullish candle. Then it comes back to retest the breakout level. That retest is my trigger. It confirms that buyers are stepping back in. My entry goes right at that retest confirmation. And for stop loss, I don't place it randomly. I look at the recent 4-hour swing low around $1,05,000, and I put my stop just below it. I add a small buffer, maybe $50 to $100 extra, so normal volatility doesn't kick me out. If I'm wrong, I know exactly how much I'm risking. For targets, I keep it simple. First target, the prior swing high around $1,11,500. Once that target is hit, I secure partial profits. Then I let the rest of the trade run, trailing my stop under each new 4-hour swing low. This way, if BTC keeps trending, I stay in the trade. But if it reverses, I've already locked in gains. So here's the whole swing trading process, step by step. Daily chart for the trend bias. 4-hour chart for the setup zone. 1-hour chart for the entry trigger. Clear stop loss and target. Now we will discuss about the different types of swing trading strategies. There are many styles. Number 1, trend following pullbacks. Number 2, breakout and retest. Number 3, reversals at key levels. Number 4, range-bound mean reversion. Number 5, momentum continuation. I won't explain them now. If you want me to break down any of these in detail, comment below, and I'll make a separate video for it. Let's talk about risk management and psychology. Here's the truth. Swing trading is more about patience than charts. I only take trades when all criteria align. I don't widen stops to give it room. If price doesn't trigger me, I skip. Patience is what separates pros from beginners. I'd rather miss a move than force a bad trade. Different kind of common mistakes beginners make. Chasing a big candle after the move is already done. Moving stops away when price moves against them, trading ranges like their trends, and getting chopped. Oversizing trades because of gut feeling. Look here, Tesla breaks out strongly, but without a retest. Beginners jump in, price reverses, and they get stopped out. That's why I wait for confirmation. Now I'm going to tell you my weekly workflow. My process is simple. Weekend scan for crypto and stocks. Build watch list. Mark levels, set alerts, daily 10-minute check. If trigger forms, I execute. If not, I wait. Alerts save me from watching the screen all day. This is my final conclusion that swing trading is about simplicity and discipline. Daily chart for bias, 4-hour chart for setup, 1 hour for trigger, risk defined, patience applied. Now you tell me, which strategy do you want next? Trend following, breakout, or reversals? Drop it in the comments. I'll prioritize it. If this helped, hit like and subscribe so I can keep creating more pro-level tutorials for you. This video is for educational purposes only. I'm not a financial advisor. TradingView.com charts used to make this video. Please do your own research before making any decisions.